Hey, Job here. On this channel, I invest 100% of my income to create monthly cash flow that will eventually cover all my expenses and my full salary. It was another roller coaster of a week this week. A lot of turbulence in the stock market, as we all saw. And on the games industry front, you guessed it, even more layoffs this week. It's kind of what I talk about, right? And why I've kind of started this whole thing. It just keeps happening every week, every other week, every month at least, for sure. So the layoffs keep happening, and I keep building towards replacing my salary with dividend income to eventually retire from this industry. We'll go over all that market news, layoff news, as well as my week 62 portfolio update since I started this strategy back in May 2025 last year. I'll go into all the details of my performance this week, breaking down how I slightly underperformed against the S&P 500 this week with my 1.85% total return loss. I'll check in on my margin health as usual, all my dividends received, go through some light portfolio thoughts this week, and end with a different sort of finance video this week that goes over actually like why the games industry is in the trouble that it is in right now. So if you're ever curious of like why I'm kind of doing this a bit deeper and kind of seeing all the systemic issues that are happening. Right? But all that said, you'll get radical transparency on this channel, whether the market is up or down. And this week it's slightly down. You'll see all my real numbers and see exactly how much skin I have in the game for any given position. If you want to see all of this for yourself, check out the free Snowball portfolio link in the description below. And if you appreciate all this transparency, give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. If we pop over the weekly flow chart, and also I'm curious too, so for anyone that's new for the channel specifically, do you appreciate just having a self-contained video for this chart? For people that are not new to the channel, I know you mostly skip over this, so it's not an issue. But for anyone new to the channel, definitely curious to see if you'd rather see me kind of go over this every video, or if you like having the link at the top right there. But not going to go over this week. This is just a weekly flowchart I use to stay 100% invested and always live out of my Robinhood brokerage account. If you want a deep dive of this, check out the link at the top right, and we'll just get started. So as we pop over to just cover some news this week, just because there's been a lot. So on the games front, more layoffs. 10 cents, Lightspeed LA down in Southern California got hit by layoffs. Looks like their game Last Sentinel got canceled and they laid off 80 staff. So quite a bit of that studio. I think they were probably like 200 something. So that's quite a bit of the studio. If we check out that gaming layoffs website that I showed the other week, Double Fine Productions got hit, 23 employees got affected. So they recently just came off from under Microsoft and bought back their independence, but now that they're fully independent, they couldn't run the headcount that they had before. So I think there were something like 90 something employees. So that's like 1 in 4 people that they laid off, which is really tough. So the layoffs keep happening. Last time I covered stuff was this week, and then you can kind of see all the layoffs that have happened ever since. It's just nonstop, and like this year, it's brutal, honestly. Like you can kind of see how it was in 2025. There was a little bit of a dip, but it's kind of ticking back up. And July was like the most brutal one this year so far. So, or this month so far. So like we'll see if it keeps happening. I mean, it will keep happening the rest of the year. Hopefully not as brutal as July. But yeah, I mean, this is a big reason I'm doing what I'm doing, like, and why I want to retire early from this industry. I think there's just some big issues that I just don't know how we're gonna get through, and stuff has just changed so much over the years since I first started over 17 years ago. So yeah, that's the layoff side and game side. On the stock market side, big reason chip and memory stocks have been dipping, right, is South Korea's market like tanked 44% over the last 40 days. You can kind of see that here, right? And I guess reading into it more this week, turns out South Korea just like introduced like single stock leverage ETFs, like 2x, 3x stocks. And like I guess a lot of retail traders were buying into that to like really profit from like SK Hynix and Samsung run up. And so a lot of them got margin called over the last month, and that's like a lot of the adult population, to 3.4%, which is crazy. And just kind of researching how, because like margin levels are hitting like record levels on the US as well too. And I was kind of researching where it is for in comparison to Korea. But from, if we kind of weight it against the market cap, what I saw is that like Korea was actually, as far as margin compared to like the country's market cap, is actually 4 to 5x more leverage compared to the US as far as like the margin accounts and stuff too. So that was interesting to see and research this week. But I'm going to keep an eye on, especially if you're invested into the chips and memory stock stuff. Definitely, I'm keeping an eye on this, given that I'm in DRAM and chippy. And this could potentially affect things, right? Especially for all those in tech. On the Japan side of things, looks like they're kind of taking steps to kind of help prop up the yen. And then I guess the US is stepping in too and selling their euros to buy yen, because like Japan holds a lot of US government bonds debt. So if it goes too high, that'll be bad. Definitely worth keeping an eye on too. This could kind of potentially affect a lot of things like mortgage interest rates, just the stock market in general dipping. So another thing to keep an eye on. And then this weekend, a lot going on too. Conflict in Iran is popping off again. I guess there's a fresh new bombing campaign that's going to happen this weekend. And that's the news. So stuff that I'm keeping an eye on, and as it pops up during the week, stuff that might be worth keeping an eye on for yourself. If we pop over to Robinhood, we can kind of take a look at the portfolio here. So you can see this is my full live portfolio, all my real positions, nothing's hidden. So on Friday, ended up slightly green, kind of red in the after hours, but ended the week at 214.4K. Was up 1.2K on Friday, or 0.57%. On the week, you can see here that I was down 1.85%, like I mentioned, so down 4K. So your turbulent week, it went all the way down, and I actually bought for my weekly paycheck buys in the dip area here, which is nice. It's rare that I kind of catch it so perfectly. But then on Thursday, there ended up being a jump up from, I guess, the market being excited with the Fed not raising rates for this month and just kind of holding steady. Who knows, that might still happen in the next one in September, so we'll see. But so ended the week just slightly under, and on the month, definitely down a lot still. So 15.3K, 6.69%. So I'm still excited to keep buying, because like relatively my portfolio stuff is still down. So still buying that dip overall. On the 3 months, just slightly positive, up 4.4% or 9K. Year to date, still positive, up 16.91% or 31K. So this includes gains and losses, dividends received, margin interest deducted, things like that. So it's important to keep in mind. And then if we go to all, up 38.1K or 21.63%. So pretty good overall. Definitely rough in the month, the week, the month, but still green 3 months and onwards, but it's definitely getting close to not be. If we pop over to the spreadsheet to take a closer look at everything. So if we add up all the positions together, all the assets in my portfolio, I'm sitting at a 416.8K gross value. Margin use, I'm firmly above 200K margin balance now. So I'm sitting at 202.1K and net value of 214.6K. So you basically minus that out to the gross value. But this is the 416K that's in play in the market. As far as total returns and unrealized gains, so kind of flipped a little bit more to green this week, given everything and the little run up that we had towards the end of the week. And was red for a good chunk of the week here on the unrealized gain side, but it's kind of popped back up to the green just barely. But you can kind of see as far as the red, DRAM still in the red here, but has kind of come up nicely on Friday. And, or actually, no, came down a bit on Friday, but came up a lot on Thursday. So I'm keeping an eye on this. Might still maybe dip a little bit more before I buy more, but it's definitely dipped a lot with the Korean stock market being affected, since SK Hynix and Samsung is like the biggest holdings there. YMAX and ULTY still in the red here. BCAT just holding on into green. TDAQ and TSPY still in the green with their total returns here. This is with dividends included. OVL just slightly in the red here, but this is a pretty fresh position. So any rental income I just throw into here. And then Goop, this is for all my YouTube income. This was actually down 10% at a certain point, I think earlier this week or last week. Wish I could have bought more of that dip, but only bought a little bit. And any income that I get from any YouTube related stuff, I put into this essentially. So Google pays me and then I invest back into it, and then it pays me back through the high yield income, which is nice. So just kind of keep that cash flow going from the channel. MLPI in the green here, KGLD in the red. KCOP just eked out back into the green in total returns. GIX, blocks, and BTCI all kind of struggling here. Still been buying the dip on GIX because it's a little bit more diversified. And whenever there is a good run up, it should kind of get some nice uncapped growth there. And the blocks just kind of struggling along with crypto on top of like its slight semi exposure through Nvidia and things like that. So it's kind of getting hit by a double whammy. And there's definitely a difference sometimes. They don't quite all move the same, right? Given that they're invested in different things. Some days blocks goes down more. Sometimes it goes up more than BTC. But that's my crypto exposure there, kind of sitting at less than 5% portfolio, 4.02%. If we check on how things are split for that 416K, so 185.7K is sitting in growth, so 44% of the portfolio, and then 231.1K sitting in high yield income, so 55% of the portfolio. If we check on the margin health, I keep a close eye on it every week, as you know. We're sitting at 51.5% equity. When we were doing my full paycheck investing on Wednesday, this was actually down under 50%, but with the run up that we had in the subsequent days, got a nice bump up. So firmly back into over the 50% mark there. So we'll keep investing. And gross margin and net portfolio values are all the same here. The margin maintenance value sitting at 104.2K. So basically my net portfolio value would have to fall to this amount to basically trigger a margin call. The difference there is 110.4K. So a 51.45% buffer if you go off the net portfolio value. But if you go off the gross portfolio value, if this gross amount swings 26.5%, that is the equivalent of a 51% movement. This is the equivalent of this. I always kind of keep this more in mind when I monitor this more closely than this, because this one kind of makes you feel safer than you are. So it's definitely, if you have a chance, definitely worth calculating for yourself. Take your margin buffer and divide that by your gross portfolio value. Then you'll see exactly how much of a percentage your gross portfolio value would have to move to kind of trigger a margin call. As far as my buying power, I'm sitting at 78.4K. So if you take your margin total minus your margin used, you get your buying power. And then if you take half that amount, that's basically your cash available for withdrawal, right? So 39.2K. I don't use this full amount, right? I don't go fully margin just because I want to keep very far away from a margin call. So I like kind of keeping this buffer high. Technically, this is 78.4K. I could fully invest in the portfolio if I wanted to, or even like 32.9K in cash that I could pull out for an emergency or something. And we can even model that out. Like say if I added 30.900 and then minus 32.900. So we'll see here that my equity would drop to 43.6%. My margin buffer would still kind of be okay. It definitely would get kind of uncomfortable there. I didn't even use the full amount there. I did my math wrong. I was supposed to do 39.2, but you get the idea, right? Like you can kind of model that out. Like as far as like if I took that full amount out, it would be doable, but it would kind of keep things like uncomfortably tight. So it's not something that I do. I like kind of keeping this buffer large. So that's where the margin health is at. As far as my income, I'm sitting at 5.4K a month, roughly, 65K a year in income, 1.25K a weekly, and $178 a day. So 28% distribution yield roughly. So that's if you go off just the amount that's invested into high yield income assets. And this has changed some since last week again, because I kind of recalculated my average dividends here. So as a reminder, for any of the monthly ones, I average out over the last 3 months. And then for the weeklies, I average it out over the last 4 weeks, just because I was doing the test earlier of averaging out over 3 months and makes the number higher than it should be. So I think going over the last 4 weeks feels a bit more sensible to not overinflate the average here. So roughly that's what I'm looking at. And again, like this isn't free. I'm basically carrying this 202.2K margin balance. I'm paying a 4.5% interest on it. So that's roughly $754 a month. But with all that leverage that I'm carrying, I'm making 5.4K a month. So it's a really strong positive margin spread. So I have a 4.6K monthly margin spread and basically a 23% distribution yield after margin interest. So pretty positive cash flow as far as kind of leveraging debt, right? Like same thing that you'd kind of calculate for like if you were a real estate investor, right? Kind of calculating cash flow for the houses that you own, right? Like you'd want to have a positive spread there ideally. But that's where stuff is sitting. And then if we add that to my current salary is $175K a year. If we add my dividends, so that basically boosts up my total comp to $240K. If we include my 7% annual bonus, normally it's $187.2K, but with the dividends, that's more like $252.2K. So it's kind of nice to factor that in because I almost kind of treat this as like, this is a second job that's a lot more passive for me. So who would say no to a 65K raise or a 65K second job that's like paying you all that, right? So that's why like when people bring up the issue of like taxes on this is like, yeah, worst case scenario, if I had a second job paying me 65K, I'd be paying that tax anyways. You're not going to say no to a 65K raise from your current job. So this is kind of how I see it. It's kind of like a second job that's a lot more passive, that's bringing me income every month, and I love it. And I have a great positive margin spread on it on top of it for all that margin I'm taking out. So that's where the income's sitting. And by the way, if you're interested in the spreadsheet, right, and to track all your stuff manually, this is available for Gumroad if you check the description below for $5. So just for the price of a coffee, one-time fee. But I love using this in tandem with Snowball just because more manual, like I said, and you kind of see it in my paycheck investing videos. It's kind of nice to see what gets averaged up and down as I kind of update the numbers and doing any live scenario modeling for this, for the margin use and things like that. But if we go on Snowball and have a deeper look at things, so keep the categories a little bit more granular here. So just to kind of see really what's kind of eroding and things like that. So you can kind of see here for the ultra yielders, still holding on to the positive here. So up 4.7% or 5.7K. So that's including capital gains, realized P&L, and dividends received. But you can kind of really see the NAV erosion at play here. So my cost base is 121.4K, but the value now is 94.1K. So this is really propped up by total return and dividends. So Chippy really leading the pack here. YMAX and ULTY, I haven't been investing in anymore. Really more focusing on GIX and blocks just because these have credit put spreads and have more potential for uncapped growth whenever the market turns. And GIX is a little bit more diversified here, and blocks just for crypto will potentially have a better run up whenever crypto turns. Chippy is definitely getting to the point where I might maybe invest in it with how much it's come down. It's bounced back up here, but it definitely got pretty close to my old buying point here in 52. I bought at the lows here. But might maybe throw a little bit more in Chippy with the pullback we had. And then as far as my high yield anchors, so any of the 10 to 20% yielders, that can kind of see that this is actually positive in cap gains too. So, and dividends received, just a little bit down on realized P&L here for some stuff that I sold out of, but up 12.4K or 9.77%. So this is all my pretty much my monthlies. Those are all pretty in the green. OVL just slightly in the reds, fairly new position, and same for Goop. But those will eventually get into the green, I'm sure. And then on my hedges, so this is like roughly 10% of my portfolio, sitting at more closer to 11.84% right now, but that's ORR, CLSE, and IALT, which are kind of long short ETFs. And IALT is even more in international and just kind of alternative assets. So it helps keep it humming along. What I really appreciate for ILT, you don't even see the Iran dip here. Like it just keeps coming along, which is awesome to see. And KGLD, that's kind of like my monthly gold buys that I do as a little hedge. It's definitely gold has definitely been volatile, definitely a lot more volatile than it used to be, but I've just been buying every month of this $200 instead of basically buying a put insurance. So not a perfect hedge, but I think it's like somewhat of a hedge. It still pays me some income, which is nice. That was the thing that held me back from buying gold for the longest time before that, just because it's not an income producing asset. But I think the income versions of it help solve that for me. But hopefully this will bounce back. But yeah, that's where all the categories are sitting here. So all firmly in the green, which is nice to see, even despite the dips that we've had recently. If we check in on the growth tab to kind of compare against the S&P, so I'll update this here. So you can kind of see that I lag behind the S&P, right, by 1.38% or 2.9K. If we compare it here, apples to apples. So not quite the same in Robinhood. I think maybe, also I was realizing today, like maybe because of the after hour stuff potentially too, but it doesn't quite answer it. Some weeks just off, but you can kind of see the general trend. The margin amplification really hit me as on the lows in the middle of the week. So it went down a lot more, but then went up sharply with the pullback up, but didn't quite sustain it enough to pass it. But luckily I bought on this bounce here. So I got a good chunk of this bounce here with the buys on Wednesday, which was nice. Year to date, definitely getting close to potentially underperforming the S&P. It got pretty close back here. We're within just 1% of each other, 1.3% of each other, but it bounced back up. But I wouldn't be surprised if we get some more down days. I could see this eventually crossing the threshold where I'm underperforming. But you can see how fast it can move from underperformance to outperformance and vice versa. So just the dangers of margin again. Right? That's why I give all those disclaimers in the beginning. If we check on the heat map for the week, so you can kind of see mostly green on the week, some definitely heavy hits on Chippy with like the Korean stock market stuff affecting things. XPAY actually outperformed VU, which is cool to see. Its reference asset. Momentum struggled a bit this week, and I think this has like a lot of exposure in MU, which is in chips and memory. AVLV held up steady in large cap value. Definitely slightly regretting my SCHD sell this week with like SCHD kind of kept going with the rotation from tech to value, but I think like whenever there is that reversal, this will get a lot more growth compared to SCHD. So just got to hold on for the long term. TDAQ actually way outperformed its reference asset. This is cool to see. Like I feel this happens like more often than you'd think, which is kind of cool to see. C held up steady, just neutral. ORR actually had a good week with everything going on. So I wonder if they've kind of adjusted their long shorts given everything. It's getting close to like my cost basis that I had previously. So that one's interesting. I may or may not fully sell out of it once it reaches that. Really close here. But we'll see. I might maybe split it between IALT and CLSE just because I haven't been impressed with it, with how it handled the Iran conflict, whereas CLSE and IALT really handled it really well while keeping their beta and volatility down. So you'll see. I'll have to think on it, but we'll keep a close eye on it. MLPI down a little bit given that conflict de-escalated, oil prices dropped, but then it's escalating again this week. So I expect maybe next week this might get back to green. YMAX beat VU, which is interesting to see. ULTY did not. VGT just down a bit, probably on like Chippy and SPMO, right? Similar reasons since it's a lot more exposed in tech. TSPY actually outperformed VU too, so cool to see. KGLD and KCOP metals got a nice run up this week. Blocks down quite a bit, probably on its chip exposure, Nvidia and things like that. And Google had a nice bounce back from its lows last week, so up 9.7% there. And DRAM down a lot here, but it's kind of cut off. But that's how the week was looking, and crypto down a bit here. So definitely mixed and didn't quite make it into the green, but we're all still very green overall when you look at things, right? Like Chippy still up a ton, 33%, SPMO up 21%, XPAY up 9.1%, just under VU. CLSE up a lot, VGT up a lot, and these guys kind of struggling here. That's why I'm kind of buying a lot of these on the paycheck buying days. But it's nice kind of buy a good sample of everything this week with JG3's suggestion. I definitely like doing it. A little bit more involved as far as updating everything, but that's fine. It kind of keeps it to a little bit more of a true DCA in that sense. But that's how the stuff is looking there. As far as the dividends received this week, so let's just pop back to July here. So got a total of $5,709.29 in the month. And we're going to break down the full month in a next video just because there's a lot going on this week and probably better off to split those two so I'm not rushing between stuff. I'll cover this video on Wednesday next week. I'll cover the full month here, but we're just going to focus on the week here. So quite a bit this week, not quite $1,000. We made, let's see here. 7 plus 57.58 plus 82.68 on Monday. So made $891.92 this week. So we got $45 from blocks on Monday, $37 from GIX on Monday. All the yields aren't here because I waited too long to do this video. Then Chippy, $350 from there, $150 from OVL, the first payment from OVL. So this actually just went, so deposited, I reinvested it, but then actually took out that same amount to our house fund for our bigger house that we want to buy with my wife and I. So that's doing dual purposes there. And ULTY, $161, and then $89 from YMAX, and then $57 from BCAT for its monthly payment. If we dive in a little bit deeper into the dividends here, so we can see yield on cost. Like when we talk about the yield erosion and NAV erosion, you see this plainly for ULTY and YMAX, like for how much I've put in because the prices come down so much. Really, the dividends I get, all the capital I have invested is closer to a 32% yield rather than 61%. It's eroded like almost by half. And same for YMAX. So this week I got a 40.5% dividend, but it is closer to 22% for the capital I have invested. And blocks is kind of coming down a little bit here with how much it's come down. BTCI has come down a lot too. JX is coming down a bit, but still holding steady. But you can see this middle portion here. This is what I'm kind of really mostly focusing on these days. Less so on the ultra yielders here, with GIX and blocks being the exception here. But this is really the core of the portfolio. And these hold up their yields a lot better, so you can see, and their income. So these are really great core anchors to hold in the monthlies. If we check year over year, can see how July beat itself out from last year, made 4.4K last July, and this year made 5.7K. So you really see the system at work, like beating last year's month. I think August will be harder to beat, 5.7K, and then we're kind of slated to do 5.1K in August this month. But I think that's might be the only one. I think all the other months I should be okay to beat, except October here. But really great to see this kind of year over year growth and seeing the strategy really working. And you can kind of see even ever since I made that big rebalance, it's been kind of steadily growing month over month too, which is cool to see. A lot less of the kind of NAV eroders really kind of bring things down. The monthlies that I'm investing in is really helping prop things up and kind of making a little bit more consistent as we go forward. So you really just see the strategy at play through these numbers. As far as portfolio thoughts this week, so pretty light, like nothing too crazy. I was talking about potentially moving BTCI to blocks the other week. Still kind of considering that. I'm going to be sitting on that for a little bit. I'm not going to quite move on that, but because they do move very different from each other too. Like BTCI, like obviously follows Bitcoin closer. Like some days Bitcoin is up more than blocks and vice versa, just because like, yeah, they kind of track slightly different things. But so still keeping an eye on it. That might potentially be a thing there. I'd have to realize these losses here, which would suck, but also I've offset a lot of it with like the SHD sell I did the other day. And then I was mentioning OR, right? So OR is actually in the positive. We'll see if it holds up on Monday, but still debating potentially selling this off and maybe splitting it between CLSE and IALT here, or maybe even all IALT. We'll see. Just because IALT has a good international exposure too, and a little bit more diversified than OR. I think OR is just like very concentrated in Japan, and as potentially with like the yen risk I was talking about earlier, and then also like its lack of diversity there ended up kind of biting them, I feel like, with the Iran recovery. So I'll see. Still thinking on that, but definitely back in the positive here, which is nice after all those months of red. Really lagged behind. Like CLSE went up a ton in that time, and this just kind of stayed flat and like just recovered from its red really. But as far as finance video of the week, so a bit of a different one today. So How Money Works, been following them for a while. I was surprised to see that they had a video game industry one this week, which was interesting to see. So definitely one worth checking out. Might give you a little bit more insight. Like I cover it with this, but if you want to just see it in video form of just like what's happened to the games industry, especially in the last 5-6 years ever since COVID, and how that's affected investments and games and whatnot. So craziness, honestly. And it's a big reason why I'm doing what I'm doing to get out of the rat race of this industry and just do something else with my time. And definitely worth checking out. If you have a chance, I'll link it at the top here and in the video. They kind of some key things there, just come from being an insider and kind of knowing stuff a bit more. But I think they get the gist of it, the general gist of it. So it gives a good idea for people that are maybe not in the industry. So worth giving it a look. But that's a big reason I'm working on my exit plan from it and trying to defend myself against all this turbulence. Because as you see, the layoffs are relentless. Just imagine this happening every week in your respective industry. In some industries they do, but it's just been nonstop, and it's a lot. It's a lot to deal with when you have that in your back of your mind and always on the edge of your seat. It's not a great feeling, let me tell you. As far as if you want to support the channel as usual, definitely just check out any description below for any video. You see all my free and paid links, right? If you want to join our great Discord, you can join that through either joining the Patreon or YouTube membership for $3 a month. Great community of like-minded investors. And if you want to catch up on last month's portfolio update for June before catching up on the July one coming up that I'll post on Wednesday, definitely check out the video at the bottom left. And if you appreciate all this transparency, give a like and subscribe. Peace.